feeling the pinch with this standoff with the West?
Absolutely, Tom. Hi there, everyone. As Western countries are stepping up their measures over Crimea, Russian stocks, they've been taking a beating. Moscow's MICEX was down around 3% during trading earlier on Friday. It recovered some of those losses later on, but the index still ended 1% lower. The standoff over Crimea has cost Russian stock markets dearly. The MICEX is down around 9% just this month, and Reuters says around $70 billion have flowed out of Russian stocks since the 1st of March. Credit ratings agencies are firing off warnings about the Russian economy. Fitch says its outlook on Russian debt has gone from stable to negative. It follows a similar move by Standard & Poor's. Fitch says it reflects the potential impact of sanctions on the economy. Now, after an EU summit in Brussels, the European Union has now named 12 Russian officials who will be subjected to asset freezes and travel bans. Leaders also agreed to accelerate their efforts to reduce Europe's reliance on Russian energy. Analysts warn, though, that it will take decades to turn Europe's energy market away from Russia. Mariam Saab has more.
Long-standing calls to wean Europe off Russian gas have been answered in Brussels. At heads with Moscow over Crimea, European Union leaders are more determined than ever to sideline the state, a move that would hit Russia where it hurts most, its $250 billion industry.
And today we send a clear signal that Europe, as I said, is stepping up a gear to reduce energy dependency, especially from Russia.
With imports at around 30%, making Russia Europe's biggest gas supplier, it's easier said than done. With Russia gone, the supply gap would be too great for other major suppliers like Norway and Algeria to fill. There are also warnings it would be costly. One way is to turn to liquefied natural gas produced by Qatar and Iraq. Closer to home, almost 1 trillion cubic metres of natural gas has been discovered in Israeli and Cypriot waters. And on the back of a production boom, US shale gas could eventually be an option that German Chancellor Angela Merkel would get behind.
If the United States should decide to export gas won from fracking, they would need the infrastructure for that. This could be a possible building stone of this energy mix.
The 28 EU states also want to be in a position to supply Ukraine with energy should Russia cut off supplies. They're expected to draw up an in-depth study of EU energy security by June this year.
Russian stocks. Let's take a look at how stocks elsewhere are trading. In the United States this hour, we've seen stocks coming off their previous highs. The Nasdaq and the S&P 500 are both in negative territory. We saw stocks trading higher earlier as investors digested a slew of better than expected reports on the state of the US economy, which have come out this week. But we're seeing creeping fears of the Ukraine crisis escalating over the weekend, and that is reflected in the US markets. Let's also take a look at the European markets. We saw green arrows when it comes to the main indices in Western Europe, with the London FTSE gaining 0.25% on the back of that better than expected US data I was telling you about before. The MICEX, though, once again, over in Moscow, it lost ground and it was down 1% at the close. If we take a look at some individual company news, shares in the German airline Lufthansa came under pressure on Friday. This as pilots at the flag carrier voted overwhelmingly in favour of going on strike. They're currently facing off with the company asking for higher pay and improved conditions. The date for the potential strike has not been set yet, but unions, they have pledged not to call a strike during the busy Easter holiday season. Britain's Tesco says it struck a deal that will make it the first foreign supermarket chain in India. The deal sees Tesco entering a 50-50 partnership with a unit of India's homegrown Tata Group. When the joint venture is completed, it'll operate 12 stores at first. The Indian government opened up the country's $500 billion retail sector back in 2012, but foreign supermarkets have so far been reticent to go in. And the currency exchange Mt. Gox says it's found 200,000 forgotten bitcoins with a market value of around $120 million. The Japan-based company filed for bankruptcy protection at the end of February. It blamed the loss of hundreds of thousands of bitcoins, saying that they had probably been stolen. Mt. Gox says it found some of the missing bitcoins in an old format online wallet that it thought was empty. 650,000 bitcoins remain unaccounted for. Some relief, at least for those investors who had bought bitcoins and put them into Mt. Gox. Okay, that is the business news for now. I'll be back again in around about an hour's time with more business headlines. Tom.
I wouldn't mind suddenly stumbling across 200,000 forgotten bitcoins. Do me nicely.
$2 million, not too shabby.
Not too shabby indeed. Thank you very much indeed, Marcus Carlson. It's time now for a check of the top sports stories. Your World Roundup starts right now.